Manish Gunwani is with us. He's head of equities at Bandhan AMC. Manish, great to have you with us here. Thank you very much for your time. Just a quick word on what we saw yesterday with the sharp sell-off across PSUs. You know, it's kind of interesting because this sharp up move has happened at a time when big sectors like banking and some of the largest stocks within the banking space, which were considered high quality and still is considered high quality, HDFC Bank, they've been languishing. So there's been such a sharp divergence, and I think that's prompted many to say that now is the time to actually focus in a big way on large caps and reduce exposures across mid and small caps. Just wanted your thoughts there, Manish, to begin with.
Actually, I'm not very focused on large versus mid. I think in a world where globally, I think growth will be soft and where liquidity will be easy, I think we should not cut the market on the dimension of market cap. I think you have to do bottom-up work. It's a very self-help market to my mind, because what will happen is when both global growth and India growth is also range-bound, like we are seeing with metals or IT services or with banking, there is no industry acceleration that I think you can expect. So, for example, do we expect bank credit growth to go from 15% to 20%? Do we expect global IT services growth to accelerate? I don't think we should. I don't think we can forecast that acceleration. In which case, it's all about, trying to get a stock at a good risk reward, and I think medium-term liquidity will be fine. So I'm not so fixated on. Of course, we will see these tactical corrections if the small cap index has been up 50%. You should expect at some point these tactical corrections to happen.
Thank you so much.
But I think the money will be made by having a 2, 3, 5-year view and just focusing bottom up on themes or stocks which can deliver earning surprises.
That's an interesting way to look at it. I mean, I guess that's the best way to look at it, right? Just pick your stocks, pick your sectors. It's always great to see you, on the show, Manish. I wanted to start by asking you about what sectors you can buy for the very longer term, right? Where do you see both value as well as growth potential now?
Yeah, Sonia, actually, I don't think buy and hold investing works anymore. And so I'll not go into the long-term aspect, but yeah, there are, I think, good multi-year cycles that are playing out. I think we've talked about the energy transition and power capex. I think that looks like a good 4-5-year theme. I think there is a risk reward in betting that at some point rural or mass consumption may come back. I think US pharma, generic pharma looks interesting. Real estate, I think, is a sector where we are seeing not only good demand, but supply side consolidation as well. So I think these are some of the themes worth looking at. Now, within that also, obviously, there are stocks you may like, you may not like. But yeah, I think these themes to us look quite interesting.
That's an interesting thing that you said. Buy and hold doesn't work anymore, Manish. So let me pick on that a little bit. Just explain that. Yeah. Are you saying that business cycles have become much shorter? Something else has changed? Yeah.
So 2, 3 points. One is that business cycles are shorter. 2 is the price discovery of that cycle is faster, right? So what I'm trying to say is that if you find a stock which can compound earnings over next 10 years, let's say, maybe 15 years back, every year you would have got 20, 25% kind of return. But the price discovery is so efficient today that in the first 2 years, you'll make all the money, and then you have to go and find another stock, which is like that and which is undervalued, right? And the third point is that the overall global growth, given the demographics and debt, is such that I don't think there is very high macro growth you can expect anywhere in the world, actually. So the landscape for, let's say you assume that if banking credit can grow at 15-20% for next 5 years in India, then you can bet on a small bank becoming big. The thing is, no one has visibility on that 5-10 year basis anymore. So because of these reasons, I think you have to be very nimble. The amount of institutional money is going up, which means that, as I said, not only are business cycles shorter, but the price discovery of that cycle is also faster. So I think you need to be a bit more nimble than you were 10, 15 years back.
Okay. I wanted your thoughts also on spaces like autos, for example, right? They've come back in a big way. This whole electrification theme is playing out. Tata Motors, for example, has doubled in the last 1 year. Do you see this as a structural growth story, or do you think we've reached a mature phase of the upcycle?
So in general, we like autos as a house. We're broadly overweight, more on the passenger and the two-wheeler side, not so much on the CV side. But yes, I think global auto also, last 3-4 years post-pandemic, the recoveries in Europe, China, etc., have been weak. So you can expect that at least we're not buying something at top of the cycle. So yeah, I think autos in general is an interesting space at this point of time.
IT. So just to, it's not large cap versus mid caps. It's not buy and hold. But what about global versus domestic? Because domestic oriented sectors have done extremely well. Manufacturing, industrials, capital goods, right? Maybe banking, not so much recently. Private banks, that is. But what about export sectors? I mean, do you see opportunities there? Tactically or maybe slightly longer term?
In general, I'd be more bullish in the domestic sector still, although the valuations have gone up. There might be some tactical opportunities in sectors like IT and metals, but really, when Europe, Japan, China seem structurally weak, US also entering a cyclical slowdown, that's the broad consensus, although it's not happening. I don't think you can be very bullish on large exporters because, again, the large exporters are typically mature in terms of market share. So it's not an emerging theme in one sense, right? There are obviously emerging export stories in capital goods, pharma, etc., which seem more interesting than the very large sectors. And I think the medium-term challenge for exporters could be, and we need to see how it plays, but I think that can very well happen is that the rupee can stay flat for probably the longest period of time we've seen. And then the margins of exporters are obviously can come under a lot of pressure because I don't think we've seen rupee being flat for 3-4 years. It's already 1.5 years, and the way the macro is shaping up, we may have, unless something unknown happens, given that our current account seems very, very solid. The dollar has done well for last 10 years, not likely to appreciate at a global level. In which case, let's say in 2-3 years, rupees 83, a lot of the exporters are, their business model is predicated on consistent rupee depreciation. So I think that can be a challenge. We need to see that part, how it plays.
Okay, all right. Well, just, wanted to mention one thing on the markets. It's flat now for the headline index, but there is a steep sell-off that we're seeing in the mid-caps. Just look at that. 400 points gone in the mid-cap index, and lots of stocks are now moving to 10% cuts. NBCC is down about 8%, IRB Infra is down 7%, Hoodco, SJVN. Manish, I wanted your thoughts here. Suddenly from being, the most loved sector, the PSU space has suddenly become, untouchables in the last couple of days. What do you do here if you own some of these PSU names?
Again, Sonia, I don't think it's fair to just buy a stock because it's PSU or not. There are pockets which look interesting to us, which is around the power space, and there are pockets like defense which look expensive to us. So I think everyone needs to do their bottom-up research. As I said, in general, we think the power space is interesting and the PSUs within that look interesting. You can take some bets on the divestment theme, I think, because clearly if the election outcome is favorable for the market, There is some basis to say that a lot of the divestment, the strategic divestment, which didn't happen in the last term, can come back. So those are the bets you'll have to take. But I, for example, find defense to be very expensive. So I think it all depends which pocket of PSUs you want to be.
You know, Manish, we'll leave it there for today. Thank you very much. It's a great conversation as always, and appreciate your time here on CNBC TV 18.